Yeah, good morning, everyone. Good day, my people. It's another week. It's another day to trade. It's another week for trading. So, as usual, let's do our breakdown for the week. We are starting from DXY, that's US index. Starting from monthly time frame, you know how we do it. Mark out our liquidity, which is external liquidity and internal liquidity. First thing we want to see now, or we are seeing now, is we are seeing the withdrawal liquidity. CSI liquidity have been taken. And where are we targeting? We want to target this high or this high above. To be on the safer side, we want to target this high. So going forward to weekly time frame is all the same as the monthly. Let's go to daily time frame so that we'll be fast about what we are doing. On daily time frame, we want to mark out our demand and supply. What is demand? Demand is the last sell candle before the buy movement, or supply is the last buy bullish candle before the sell movement. And this will be our what? Our supply. But moving forward, we can see that we have this small internal supply, so that our stop loss will not be much, which market has been mitigated. Market is inside it now. Then we want to target what? We want to target up for our take profit. Let's go to 4 hours so that you can see where we want to enter or where we can enter the market. From this area, we have this refinement, we have this bearish candle for the refinement of this. We can say market should come back to sweep this liquidity low. We have this liquidity here. The market to sweep this liquidity to sweep this liquidity and give us and tap into our entry. So this is actually what we have for this week. Long position, then you stop loss below this low, stop loss below the low, then we target what? Our draw on liquidity, buy side liquidity for our take profits. So this is actually what we have on DXY. So we expect market to come back to the demand zone, then we target our buy. Let's check EURUSD. On EURUSD, we have position there already, but let's delete and start afresh. For monthly time frame, we start from monthly time frame as we always did. So on monthly time frame, what can we see? We can see that market is reacting off this supply zone, which is buy before the sell candle. Market is reacting off and then giving us what? Our CRT, candle range theory. So let's delete this and mark out only CRT. The reason why I mark out the supply zone is for us to know that market is reacting from the key level. Where are we targeting? We are targeting this first TP, then the second TP should be here. And if you want to target the third TP, because markets will come and mitigate this imbalance, fair value gap. So let's go to our weekly time frame. Weekly time frame is still the same. Markets mitigate this buy side liquidity and it's coming for the sell side liquidity. What of daily time frame? On daily time frame, that's where we are going to mark out our supply zone, supply and demand. Now we are looking forward to sell. This will be our supply, which markets has mitigated. Then refinements to this, we have this supply zone here, which markets are still mitigated here. Then let's go to 4 hours, because from here we want to sell the market to this level. Our market has already mitigated and still coming back. Then let's go to 4 hours. Let's see where we can enter this trade. On 4 hour time frame, we have this zone as our what? As our supply zone. This is the last buy candle before the impulsive move to the downside. So this candle is our supply zone. So we expect market to come down from here. So Now we still have another supply zone here for the continuation. Some people have entered their market from here, which is part of signal I sent last week. So now for the continuation of the sell, if you have not entered the market, we still have this zone for our sell. Why did we have the zone for our sell is according to the law of accumulation, manipulation and distribution, we have this zone as what? We have this zone as accumulation, which we expect market to, as this market is accumulate, to manipulate to enter our zone then distribute. So this is actually what we have. Then we want to what? Want to do our sell position, then stop loss above. This is what we have this week. Where are we targeting? We are targeting the draw on liquidity, sell side liquidity. So always mark out your liquidity when you are trading forex or any trading. Know where your liquidity are, know the liquidity area on your chart. The next one should be our GBP USD. On our GBP USD, let's see what is going on. Let's delete all this and start afresh. Monthly time frame. On this monthly time frame, we have what? We have the same as EUSD. You know, EUSD and GBP USD, they are what? They are divergence, SMT divergence. So now it's reacting up the supply zone. So we still have that. Then we have this CRT, candle range theory. Then where is the candle range low? Candle range low, we have this low as our low. Let's pick this, and then we have the first TP here. So we can say we want to sell. Let's see weekly time frame still all the same. Manipulation has happened. Then we want to see this distribution. From daily time frame, on our daily time frame, we have what? We have this supply zone as well. Once you know where to mark in your DX or US index and your EUSD, you will know where you can enter on the other pairs. Now, GBP USD give us this supply zone which market has mitigated. Then what do we have? We have this inner supply zone also which market has not mitigated. Can you see? Market has not mitigated, which we expect market to come back there later. Then let's see. On this, we have, if we check, if you look very well, if you look closely, you can see that market give us something, SMT. What is SMT? SMT is the alignment between two currency. For example, now what EUUSD is doing, GBP USD will do it. But in some cases whereby EUUSD mitigate the POI, point of interest, most cases GBP USD will not mitigate the point of interest. We just use the EUUSD to align with the GBP USD. That's why they call it SMT, divergence. So now we expect market to come back to this level and sell. So that means we still have this level. All this place will be our what? Our liquidity. So let's mark this out as liquidity level, or we call it inducement. Anyhow you want to call it. It can be liquidity, it can be inducement. So that means we expect market to come back to this level and sell. So we expect market to come back here and sell. So now for you that you don't want to enter aggressively, you can use confirmation entry because I can see that this stop loss is somehow big. And another thing is market mitigates this with week, just week, giving us that market has changed character from here. Then markets come back to mitigate this supply zone here. Let me mark it so that you can see this supply zone here, which is still giving us that this market is still bearish. In case you see markets come back here and give us confirmation entry and give us confirmation entry, you can still say you want to sell the market. Maybe you can say this one giving us this confirmation entry ahead. Now you can say you want to sell. Or if the market did not give you something like that, you wait for it up there. So that's the what we have on GBP USD. It remains last two, which is USD CHF and what? On this USD CHF, let's see what is going on. Let's delete this and start refining it. On monthly time frame, you can still see that this market is giving us accumulation then manipulation. We want to see distribution. Why did I say that? This will be our accumulation, and then we see this manipulation happening, then we see distribution coming. So this is actually what we we have. But let's mark out our zones, the dawn liquidity and the likes. On this we have this. Okay, let's go to daily time frame so for us to see what. Okay, now markets give us break of structure here. Markets give us BOS of a break of structure. That means, or we can still call it change of character, anyhow you want to call it. Markets give us. Then we have this as what? As a demand zone, which market is inside a demand zone, because market has break past this bearish candle. So now we call it what? Demand zone, which market is inside the demand zone. And we can still say we want to refine it to this level, which market is still inside this demand zone. So let's go to our 4 hours to refine it very well. On our 4 hours, we have this as our demand zone, which market is inside the demand zone. After market mitigate this demand zone, we have another demand here, which market is inside already. So for us to be sure that this market is about to go up, or for us to be sure that this market is still bullish, we can say we want to wait for the market to close above this level. We want to see market close above this level, then come back to this breaker block. From there we want to buy. Or some people that have entered, some people that has entered this market from here, from this demand zone, because some people actually enter this market from here. Some people that have entered this market from this demand zone, they should keep going, they should keep pushing the market because it's still going to buy. So we should target this high. We should target the, where are we targeting? The drawn liquidity. Where is the drawn liquidity? Okay, we don't mark out the drawn liquidity on the higher time frame. Let's see where we are targeting on higher time frame. Okay, our first drawn liquidity should be, first TP should be here, then next one should be here before we target any other one. So let's just put our drawn liquidity there. So we target this, let's say we target this. So 1:1:11 to what? So this is actually for us, for those people that have not entered this trade, wait for it to break this supply zone. After breaking it, this supply will turn to demand zone, which will be breaker block. From there you target up, you target your tip, you do on buy side liquidity. That's that about USDC CHF. Then the last one, let's check USD card. You're okay. USD card we still have set up. Okay, some people will say why are we not checking gold? We'll still check gold. Let's start from monthly, weekly, the way we always start. Okay, let's see monthly first. Let's delete all this. Okay, on this monthly time frame, what are we saying? We see this CRT candle range shows buy side liquidity has been swept. What are we going to do? We want to the market to come back to this sell side. Sorry, sell side liquidity has been swept. We want it to come back to this buy side liquidity. Let's see weekly time frame. On this weekly time frame, we still see that this market has been swept. Buy side liquidity has been swept. We want to come back to this buy side liquidity. On daily time frame, we mark out our supply and demand as we always did. Now, where is our demand? Demand zone is here. The buy sell before the buy candle. So this is our demand because why did we mark it? Because it strip liquidity, then give us Marabuzo candle to close inside, or we call it bullish engulfing candle. So after then, we want the market to buy from here. Some people have entered the market from here, but if you have not entered the market yet, you still have opportunity, more opportunity. On this daily time frame as a swing trader, we wait for market to close above this level. You wait for market to close above this level, and you do something like this. Come back to this breaker block, then you buy. Where is the breaker block? For us that do not know breaker block, this is supply zone. This is supposed to be supply zone that to push markets down back. But once markets pass this, it will now automatically turn to demand zone, which will be breaker block. Now break this zone and come back down, you target the next run on liquidity. Let's go to 4 hours time frame. For us that have not joined this market yet, we can still see opportunity on this 4 hour time frame. Reason is the first entry is should be here. Yes, we can say we have opportunity from here because market mitigate this three dark crown, this three bearish candle. Market has mitigated it here. On this note, I think okay, market has not mitigated. Let's use the body. So we expect market to come back to this level. If markets can come back to this level now, we say we want to buy the market. So we expect those people that want to sell limit order can set it because the stop loss will not be much. So then you target where your next draw on liquidity. So you target your next draw on liquidity. So that's that about USD 1:17 ratio. 1:17. So that's that about that. Then the last pair that I want to check, I cannot check all the pairs because of the what? Because of the long videos and the likes. So now on this DX, on this XAUSD, we have this supply zone. Let's check from daily time frame to see where market is actually reacting from. Okay, now market reacts from this breaker block first, come back giving us demand zone. This is actually what I call breaker block. This is a supply zone which market sell from, either test and break it. After breaking it, come back to form demand zone. Supply turn to demand. Now it give us demand zone, then make market go up and come back to enter the demand zone. Where are we targeting? We have this supply zone here which we expect market to sell from. Let's see what is going on 4 hours and why we want to enter the market. Now as the market tap into the demand zone, it create another demand zone for us which market later come back to tap in. We expect market to come and tap into this demand zone also before going to this what supply zone. So this is actually what we expect. Let's see, for continuation trend of this market, this is actually what we want to see. We want to see markets enter this zone, from this zone down to our door on liquidity, which is, it can be here or it can be below because we have so many liquidity below here, this trend line liquidity. So but for us to be on the safer side, this is good. So we can still target this zone as our draw on liquidity. So that's that about this week analysis. Which other pairs do you want me to trace? You can drop it on the comment section or message directly. So thank you for your time. Have a nice day.